Hi, this is Brent with another video for our chart breakdown series at Trade Therapy. Today is Wednesday, October 23rd. We are looking at the NASDAQ 100, the Qs. It was part of our top-down analysis and our clarity spotlight last week for Microsoft. We are looking at a chart that we originally published in July for From the Trading Couch. We had been talking up to that point, and really all year we've been talking about rotation out of the mega cap tech sector and into interest rate sensitive sectors of the market as monetary policy change was approaching and now has changed. In July is when we really started to see the pace of that rotation picking up and started to really see areas of concern within the trend. This is a quarterly chart. We do talk about in trade therapy content, utilizing longer term charts to get a feel for where the overall trend is and if there were any areas of concern upcoming within the charts, which we identified here back in July when we noticed that the Qs was up against its all-time supply line here. So this all-time resistance line here, we thought there would be a good chance for a reversal candle to form at this point. This is an example of a reversal candle forming here at the bottom of the Great Financial Crisis. And so we were expecting the possibility for a downturn here and a reversal candle to form there. One other thing that really jumps out of this chart, and we talk a lot about it in trade therapy content. If you're not reading trade therapy content, you should be. If you are just following price action and trying to draw trend lines and looking for patterns that develop with nothing but price action as the sole basis of your analysis, you have an exponentially larger possibility of becoming exit liquidity because you have no idea what institutions are actually doing if you are disregarding the bottom of this chart. So we talk a lot about in trade therapy, reading volume and utilizing volume to get a feel for what institutions are actually doing. Here's a good example of it. This is the bottom of the Great Financial Crisis. See these huge volume bars. This is what real concern looks like in the market. Back in this time period, there was concern of the stability of the overall financial system. And so when Wall Street dumps their positions, this is what it looks like. This is real concern. Here, coming out of the post-COVID corrective period when the S&P 500 has been on a tear and we have heard nothing but gloom and doom and this impending recession and how horrible our economic climate is. And we see declining volumes down here on bottom. So institutions have not been selling off their positions. They are not concerned about an impending recession. So that led us to believe that we are most likely looking at a reaccumulation period happening here. If we jump into a shorter time frame, we're now looking at a chart that we published early in September. This is the reaccumulation structure forming that we were expecting. There was a reversal doji that formed right there, leading into the yen carry trade. This is the sharp downturn, wave A of the yen carry trade. You see volume increasing, supply being dumped on the market after we see volume dropping off heading into it. At the time, we wrote about in our content and published on the socials that it is quite common in these three-wave corrective periods for wave A to be equivalent to wave C. So there was a setup brewing that there could be another sharp downturn coming up a little bit later in the year. Now, in September, as the Qs had this long candle here, would drop down here, we were still expecting this support for the momentum indicator RSI to hold, and we were still expecting to see a price pushed back up to test this reversal doji. These reversals that form like this, these are short positions and they will be defended, and we expected to see that take place. So if we jump over to today's chart, this is the chart that we also included in our coverage of Microsoft last week as part of our top-down analysis. You see, we did get that, we did see price come back up to the top of the range. We did see support in the momentum indicator, pushing price back up and testing that short position. We believe that that short position is going to hold. It will be defended, and there's a strong possibility that we see wave C form here equivalent to wave A, and we see price come back down to this level right in here. There's a pivot right here. If you see these candles end right there and these candles end right at the same level, that is a pivot. So we expect to see price come back down and test and potentially undercut that pivot slightly to take out some of this inefficiency in this candle right here. So that red 55-week exponential moving average is in the vicinity. We think there's a pretty good chance that we see some sort of a negative reaction to the presidential election and or the FOMC meeting that is that same week. So it would be very typical of Wall Street to produce some sort of a flush down, some sort of a negative reaction to the election, making everyone think that the markets are going to turn and crash, only to come down and finish reaccumulating their position and then continue the uptrend. So this is what we're looking for. We're looking for a similar volume spike here with more dark gray. These are red, dark gray as shown. Red supply bars here as price comes down and retests this pivot, possibly slightly undercutting it before continuing on with the trend. If you do read trade therapy content, you know that during highly volatile times such as these, it's a good idea to keep a long time frame in mind. Don't fall victim to sudden drops in the market like this. This is a good opportunity to either enter into, if you did take profit at the top, re-enter into your mega cap tech positions, or add to positions if you're still holding them. If you are a true long-term investor, we think this is a good opportunity for us to come in and add to our long positions as well. So hope that helps. Any questions or anybody that took a look at Clarity last week on Microsoft, and hopefully everyone is prepared going into this with a plan that they are ready to execute on should we see this form. Does this mean that price can't break out of this and continue on? No, that's not what it means. Anything's possible, but based on the charts in front of us and the data in front of us that we've collected, everything is pointing us into this likely outcome.